Liquidity sweeps. Every trader has been fooled by them, but only a few can dominate them. I'm 𝗰𝗀𝗂𝗀𝗀 from Spektrades, and today I'll be showing you exactly on how to identify liquidity sweeps and generate thousands from the market. Without wasting any time, let's hop right into this video. Liquidity is a true exciting concept, but before we can hop on the charts and look at true examples of liquidity, we have to develop a clear understanding of liquidity and how the institutions hunt it. As you can see right here, this is our key areas of liquidity. We can expect liquidity at old swing highs or old swing lows right here. This is our old swing low or this old swing high. We can see that price will rally lower to clear this old swing low and then rally higher to clear this old swing high. This right here is a key area of liquidity. Or we can see equal highs or equal lows be key areas of liquidity. Right here we can see that price left these equal lows. Price then rally down lower and clear these equal lows right here before rallying higher. This right here was a key area of liquidity. This right here was a key area of liquidity as well. These equal highs right here. Price rally higher, left these equal highs and then push down lower to then go back higher to clear these equal highs. Equal highs and equal lows are also key areas of liquidity. Other key areas of liquidity are the sessions swing highs or the sessions swing lows. We can have the Asian highs or the Asian lows, the London highs or the London lows, or the New York highs or the New York lows be key areas of liquidity as well. Before we go more in depth, make sure you guys are taking notes of all of this right here. Make sure you guys are taking a screenshot or grabbing a notebook to write down all these key descriptions. As you can see right here, what is liquidity? Liquidity represents pending buy or sell orders stacked above significant highs and lows. But why do institutions hunt liquidity? They need liquidity to fill large orders. By sweeping stops or triggering breakouts, they fuel their moves. What is a golden rule? The golden rule is the liquidity grab. It is the opportunity for retail traders, but it is the money-making setups for smart money. Why does it matter? It matters because understanding liquidity helps you identify where the institutions are hiding at. As we can see right here in this schematic, price had rallied higher and cleared our equal highs, and then tap inside of a higher time frame supply zone. And then we can see that price push down lower and give us a lower time frame breakup structure. And then right here, price rallied and give us a inducement in this middle of the range before we can see that price will push up a little higher to clear this inducement high, which is a point of liquidity, before tapping inside of our supply zone to then push down lower to clear our inducement low, which is also a point of liquidity. This is the same format for a bullish order as well. We can see that price give us equal lows right here before price push down lower to clear this equal low and tap inside of our higher time frame demand zone. And then we can see that price rally higher to give us a lower time frame breakup structure. And then we can see that price will give us a inducement balance right here, give us a consolidation zone before price push down lower, tap inside of our demand zone, and then on this rally higher to come and clear our inducement high. This right here is just a clear understanding of how liquidity works and how the institutions hunt it. Now let's go over on how we can spot liquidity grabs, a step-by-step process. Make sure you guys are taking a screenshot of this or writing this down. So number one, before the move, we have to look for areas where liquidity is likely to be hiding at. Then we can see where sessions may be overlapping at, such as the London and the New York session may have overlapping sessions. And then we need to detect swing highs and swing lows in trending markets. Remember that the swing highs and swing lows are key points of liquidity. Then we may look for tight consolidations or built up phases, right? Just like I stated, price may move inside of a range, building a inducement zone or a consolidation zone. That right there is a zone of liquidity as well. This right here is the key things that we need to observe before the move. Then second is the liquidity grab. We need to watch for aggressive wicks breaking above or below liquidity zones. Just like we stated, these liquidity zones right here, we have to watch aggressive wicks break above or below all these liquidity zones. And then we confirm if price returned inside the range immediately after. And then for number three is our stop loss and take profit. For our stop loss, we place our stop loss above the wick for bearish setups / below for bullish setups, and our take profit is nearest opposing liquidity zone or structure point. As we can see right here for our entry setup right here, price had went lower and give us a breakup structure of this old low. Then we can see that price rallied higher and give us a equal high liquidity right here. This is our equal highs, just like we stated in the beginning. Then we can see that price left this inducement order block right here. This is what we call a fake order block. Price will rally higher, give us this inducement order block, but then tricking traders to placing their stop losses above these equal highs, to then for price to push up higher, clear this inducement and clear this equal high to tap inside of the real order block right here, to then target opposing side of liquidity. So we will place our stop loss above the order block high, and we're targeting opposing side of liquidity, these old lows. And now for a real world application and action plan. For a quick recap, we have to identify liquidity zones on the higher time frame. We have to wait for a fake out or a stop hunt. We confirm with candlestick patterns or a retest, and then we execute with proper risk management. Common pitfalls we may see is that we may enter before confirmations. That's why we have to wait for confirmations to happen. And then for the last pitfall we may see is over leveraging on tight consolidation. We have to stay patient and wait for price to come inside of our zones before we enter. We do not want to be hasty and enter way too fast. As you can see right here on our real world application, we see that price will push down lower and give us a fake out right here. This is a heavy sell off. This is a heavy sell off to trick traders into thinking that price is selling, but it's just giving us a liquidity sweep. And then we're gonna see price rally higher to give us a market structure shift of old highs right here. And then we see that all these inter-range liquidities are being built, and we have our fair value gaps. All of these right here are zones of liquidity. We see that price builds all these old lows in this fair value gap. The fair value gap is known as the magnet of the market. So if price builds all these inter-range liquidities in this fair value gap, we can see that price will now seek this fair value gap, fill it in, and tap inside of our IPA right here, so we can place our stop loss right at this old low right here, this order block low, and we're targeting buy side liquidity. So we're risking 1R to make 3R. We're executing with proper risk management. Now let's hop on the live charts to see a top-down analysis on how we may use liquidity to become extremely for our time frames. As you can see right here, price had rallied higher and then push down lower and give us this higher time frame liquidity low right here. This is our higher time frame swing low. Just like I stated, we were looking for our zones to have our liquidity above or below the zone. So this is our higher time frame demand zone right here with the liquidity right above it. So we want to see that price rally down lower and clear that liquidity and tap inside of our higher time frame demand zone. Now let's scale down to the 15-minute time frames to see exactly how this trade played out. And now as we can see on the 15-minute time frames, after price had rallied down lower and tapped inside of our 4-hour demand zone with the liquidity that was above it, price had rallied higher and give us a breakup structure of these prior old highs right here. Signifies that this right here is a strong low. Price won't push down lower to violate this old low right here. We can trust this low. Then we can see that price push down lower and mitigate this order block right here before we see that price had rallied higher. And then we can see that price push up higher and give us a breakup structure of these old highs right here. Then we can see that price consolidated right here and then left this 15-minute fair value gap. In this fair value gap right here, we can see that price push down lower, filled in the 50% of this fair value gap, but we can place our entries right at the open of this fair value gap and our stop loss right at these old lows right here. So as we can see, price cleared a higher time frame liquidity zone, the prior old highs we have on the left of us, to then rally higher to give us a breakup structure, and then price pulled down lower to mitigate old order blocks right here, to then rally higher to give us a inter-range structure break. Then we see that price will accumulate orders right here. This is another point of our liquidities right here, this consolidation zone right here. We have to wait for price to build out a zone right here, just like I stated. We wait for price to show us a type of liquidity. This is our consolidation zone right here. Liquidity is being built above and below this zone right here. And right below the zone, what do we have? We have a 15-minute fair value gap. The fair value gaps is the magnet of the markets. We can see that price pulled back inside of this fair value gap, filled in the 50%. We can place our stop loss at the old lows to then rally higher. If you miss this entry right here on this pullback, we can see that price give us a breakup structure of these old highs, leaving this breaker block right here. So we can see that price give us a retest. Just like I stated, if you miss this right here, you can also get a retest after price rallies higher. So we can see that price give us a retest, clears this swing low right here. Just like I stated, the swing lows is another point of liquidity. We're just looking to clear points of liquidity, tap inside of a zone for price to rally higher to clear our buy side liquidity. So we have our consolidation zone right here as our point of liquidity. We have our buy side liquidity as our take profits. And we have these old swing lows right here as old lows of points of liquidity, where price will clear and then tap inside of a zone to then rally back higher.